The market opens in 4 minutes. You've been here since 5:47 in the morning. 3 screens, a lukewarm coffee, a stack of memos no one will touch. You are 23 years old. You carry $94,000 in debt. Your salary felt enormous until you saw what your MD builds in a single day. So you run the numbers again. You format the models. You don't complain. You learn to read a 10K in 40 minutes. That's survival at this level. And then one morning, you find something. A wrong number, buried in your senior associate's model. A mistake worth $2 million. You fix it. You correct it quietly in your own file. You don't mention it to anyone because the system doesn't reward honesty. It rewards discretion. Your days run 14 hours, sometimes 18. You stop counting after the first month. You observe which managing directors to cultivate and which to avoid. You don't have power yet, but you know exactly where it lives. You process a $430 million transaction from a spreadsheet on the 31st floor. You never meet the client. You never see the boardroom. But your numbers are in that room. Your work is in the deck. And somewhere in that distance, you start to understand the geometry of all this. You are the foundation, the part no one sees, the part no one acknowledges. The floor is empty. It's late. You look out at the city, and for the first time, you're no longer thinking about the salary. 2 years later, you're in the room, not the main room, the anteroom where the seniors wait. But you're there. And that's the shift. You structure now. Junior pieces, but real structure. You draft the terms of a $180 million mezzanine financing. You sit across from a CFO for the first time. You walk through a covenant breach scenario without flinching because you've examined that scenario 40 times over the past week. That's your currency at this level. Preparation, execution, a leveraged buyout of a regional logistics company. It will almost certainly result in operational cuts. You don't model the human cost. No one asks you to. You model EBITDA margins, debt service coverage. You present it cleanly. The deal moves forward. You collect your bonus. You don't think about Ohio. You rationalize it the way everyone does. You only ran the numbers. The second rule, proximity to capital is proximity to power. And proximity to power is proximity to decisions you would have preferred never to face. You begin building your own network of loyalties. A VP who brings you into deals, a senior who feeds you information. You protect each other, not out of friendship, but out of mutual utility. Welcome to the first layer of the machine within the machine. You manage people now. Their output, their mistakes, their hours. A team of 4 analysts, 2 associates. You stop counting your own hours. You think in deal flow now, not hours, not tasks. Deal flow. You close your first transaction independently. A $620 million acquisition financing. European infrastructure in Southeast Asia. Your MD is on the cover page. You're on page 6. But in the room, the client addresses you, asks you questions, looks to you when the numbers get complicated. That's the shift at the VP level. You're no longer supported. You're a deal maker. You begin to see more clearly the ethical architecture of high finance. The target company's pension commitments restructured post-close. The acquiring fund needs a 22% IRR. The pension restructuring makes it possible. You know what that means for the retirees. You don't say it. No one says it in the meeting. The deal closes in 11 weeks. Your year-end bonus is $480,000. You wire $40,000 to your parents. You buy a 1-bedroom in a city where a 1-bedroom means arrival. You tell yourself the pension fund was already insolvent. You might even be right. The third rule at the VP level, you stop asking whether the deal is good. You ask whether it's executable. At this level, that's the only question that remains. You source now. Not just deal execution, you originate them. Clients call you directly, not your managing director, you. Private equity funds route their deal flow through you. 3 closings in 4 years. You've never missed a deadline, never leaked information. That's worth more than intelligence. You manage a portfolio of advisory mandates worth $1.2 billion. You now sit in pitches as the senior banker. Your associate runs the model. Your VP coordinates due diligence. You sell the vision. You sell the trust. That's the product. You begin to understand leverage in its purest form. Not financial leverage, informational leverage, knowledge. You know which companies are about to launch a strategic process before it's announced. You know which sovereign fund is quietly building a position before any disclosure. You don't trade on it. That's not what this is about at this level. But you know. And knowing makes you sharper, more decisive. Then you lose a deal. Not because of the numbers, because of a relationship you didn't have. A competing MD frequented the same private club as the board chairman. That's why you lost a $2.8 billion mandate, a club membership. You don't lose your composure. You make no excuses. You join 2 clubs within the month. At the director level, the deal is never just about the numbers. The calls come earlier now. Sometimes before markets open, sometimes from masked numbers. You manage 12 client relationships, each worth between $3 million and $40 million in annual fee revenue. You no longer work for the bank. You are the bank's relationship with these clients. That's a subtle but seismic distinction. You sit on an internal credit committee, $900 million revolving credit, deteriorating balance sheet. You vote yes. Not because the credit is sound, but because losing the relationship would cost 3 times the exposure. It's a political decision dressed as a financial one. Every major decision at this level is. You travel constantly. Singapore, Zurich, Abu Dhabi, Dubai. You dine with ministers, not politicians, ministers. These aren't business dinners. They are relationship maintenance. The relationship is the business. Capital doesn't follow returns alone. It follows relationships, political alignment, regulatory familiarity, trust between the right people. The best deal in the world doesn't execute without that trust. Your identity has quietly restructured itself around the machine. You don't notice. No one does, not at first. There are 14 partners in the division. You are one of them now. Your name is on the door. Not literally, but in every way that counts. You have a profit interest in the fund. Capital in every major transaction the firm runs. When the fund performs, you perform. When it doesn't, neither do you. That changes everything about how you think. You stop optimizing for the annual bonus. You optimize for the 5-year fund cycle. You stop thinking in quarters. You start thinking in decades. You led the acquisition of a European energy infrastructure company for $4.3 billion. 3 months of negotiation, 4 regulatory jurisdictions, 2 competing bids. You lead the consortium, your fund, a Middle Eastern sovereign co-investor, a Canadian pension fund. The closing dinner is held in London. The handshake takes place in a room that appears on no floor plan. You structure the offshore holding through a Luxembourg SCSP feeding into a Cayman feeder fund. The tax efficiency is substantial. The structure is entirely legal. 2 lawyers, Dublin and Singapore, validated it from every angle. You sign without hesitation. The deal adds 180 basis points to the fund's net IRR. Your carried interest on this single transaction will compound to over $40 million. You stop attending most social events, not because you're too busy, but because the conversations no longer have utility. Your social world has contracted to the people who control capital. There are 2 calls today. One from a Gulf sovereign fund, $7 billion seeking deployment. They want your fund to anchor the deal flow. You are one of 3 firms they will entrust with this mandate. The second call comes from a finance ministry, not a banker, the minister. You take both calls from the same room. 44th floor, corner office, no trading screens, no Bloomberg terminal. Just glass and silence and a phone that connects you to people who move entire asset classes. You are no longer in the market. The market is in you. Your positioning, your sentiment, your deployment decisions move price discovery. When you buy, others watch. When you pull back, analysts write for weeks. You sit on 3 boards. You advise the infrastructure program of a multilateral development bank. You brief the government twice a year on capital market conditions. You don't lobby, you advise. The distinction is real. The influence is the same. The moral architecture becomes abstract at this level. The consequences are too diffuse to be felt, too distributed across too many institutions. You don't feel the downstream layoffs. You feel the fund return. You optimize the fund return. That's the system. The seventh rule. There is no longer an outside perspective. You are the perspective. You carry no title. There is just a name, no designation beneath it. Senior advisor, chairman emeritus, a name attached to a family office. All of it technically accurate, none of it true. Stakes in 5 funds, 2 private banks, and a reinsurance vehicle registered in Bermuda. You are 71 years old, 47 years inside the machine. It has been there longer. 3 central bank governors know you by your first name, not by your title, not because you influence monetary policy, because information flows in both directions. Your committee deploys across sovereign debt, infrastructure, equities, distressed credit, and currency carry structures, 14 markets. Total AUM exceeds $90 billion. The exact figure is known to 4 people. You are one of them. You don't trade your position. Trading is responding to the market. Positioning is preceding it. 2 years before anyone else, you see a currency block facing a liquidity stress. You structure accordingly, not to trigger the event, but to be on the right side when it arrives. When it happens, your funds win. The press calls it prescient risk management. The cost of this level, no one prepares you for it. The people you trust can be counted on one hand, fewer than 10. Beyond that circle, nothing. You have more access than anyone in your life can comprehend, and almost no one to tell it to. You are too embedded to be removed. The system would cost more to dismantle than to maintain. This isn't power. It's something quieter, colder, and more permanent than power. A boardroom in Geneva, 4 people, no agenda on the table, no presentation on the screen. You speak for about 6 minutes. The room listens to every word. Then you stop, and the room moves. Somewhere, in a glass tower in a city that never stops, a 23-year-old turns on a terminal for the very first time. Their badge reads, Analyst, first year. The badge has always said that. It always will. They believe this is all about the salary. They believe the system rewards what you put into it. They don't yet know what the system truly rewards, but they'll find out. The terminal blinks, the market opens, and the machine takes one more step.